What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 29th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got a wide range of really important topics to discuss. We've got to start off by taking a look at the bloodshed that we've had in cryptocurrencies over the last 24 hours. And rather than focusing in on trying to find out what caused this, to really look at history and see how we're repeating history yet again. Along with that, there's some positive news in regards to BACT that we'll dive into later on in the video. And outside of that, for traditional markets, we've got to talk about how we might be seeing yet again another set of bubbles being built in the passive income markets, but along with that, in the negative yielding bond market or the general treasury market. Okay, so we've got lots of things to discuss, guys, but one last thing that I want to recommend you stick around for is the interview that I do with Dan Weinberger towards the end of the video, the CEO and founder of Morpheus Network. As you all know, I was very early cover of the project, and I really believe that they've been doing some awesome stuff as of recent, so stay tuned for that sponsored interview later towards the end of the video. All right, so let's go ahead and take a look across the market, guys. Probably the most important thing we need to look at outside of Golem, really one of the few altcoins that I would trust that's in the green right now in the sense of actually having real volume. Outside of Golem, the whole market is in nearly double-digit territory to the downside. Most altcoins are experiencing double-digit downside action at the moment, with a lot of other altcoins right now in severe red territory across the board. Not just for Bitcoin, not just for altcoins, but the entire market as a whole. So again, I think a lot of people are going to look for reasons why this might be happening. The only thing I can point to that might be a reason as to why we're seeing some of these players, such as Ren, Algorand, Elastos, BitTorrent, Holochain, Qtum, why a lot of these players are in the severe double-digit territory that they're at is probably because a lot of these are predominantly traded, if not only traded, on Asia-based exchanges, a lot of which are not going to be able to service U.S. clients. Very important thing to take into account, especially plays like Ren and Elastos. They're completely on exchanges that are outside of the West. So again, I think this might be playing a little bit of a role here. But in the sense of the overall downturn with Bitcoin and other players, again, there's not so much any fundamental reasons. And we'll talk about what I really think was the one technical reason that price really went down. Just to run through some data here, though, we're about $17 billion down in market cap at the moment, last time I checked it, and then also in the sense of market dominance, still below the highs here at 70%, right around the 69 to 70% range. So still sitting there. We really only went up, I think it was like 0.18 or something from the last day, or yeah, so sorry, I know only 0.08%. I guess if you took it over the last 2 days, 0.12% in this case. So Bitcoin dominance really not changing here. Very interesting thing to note. And we'll see if we get that spike up in Bitcoin dominance here soon. But again, still remaining at lower levels as much as there is a lot of bloodshed across the market right now. So if we take a look here at the overall market in the sense of assets here on CryptoWatch, we are seeing, again, pretty bad price action across the board. No one's getting away with it in most cases. Some altcoins still up over the last 7 days. There's a few random exceptions that are more kind of small cap coins, but overall market is looking pretty bad. Now, why is it that Bitcoin's price is now starting to kind of pick up pace? There's not a crazy amount of volume. Volume's not that big. It's about half of what we're getting on some of these sell side days back here with about the same price range. So what's really justified the price going down here? I don't think it's anything fundamental. I think it's simply technical analysis. And we've been talking about this for quite some time in the channel, guys. As much as I have been hopeful, to be absolutely fair, I was hopeful that we would turn upward in the wedge that we were building. It seems we've gone through the bottom of the wedge. We broke through the two indicators we talked about watching, guys, for support on Bitcoin was this line of support and the 100-day. That's all we're looking for. And once we close through there, the volume picked up. Let's take a look at the hourly here. Right? The moving averages are going to change, obviously, but you can generally tell. When we broke through the 100-day and that support line, it was very clear that it was time for price to move downward. And again, you'll get some inconsistencies when this is with every charting application and stuff. Sometimes when you go from the hourly to the daily and stuff, it's hard to get a perfect support line. But generally, you can see here when we closed under there, right? Price movement starts to kick into the downside. It's very clear to traders that we need to see price go lower and it needs to go down to a lower support range. And that's where people start selling and they start thinking about, okay, where's my next entry port? Because people who are really pushing the price in the short term, they're trying to trade between, $500 intervals, $1,000 intervals. That's how they make their money. And they're trying to play off the volatility of Bitcoin. Well, even though the volume isn't that severe, what's really the next support range here? I would say that, my more bearish and pessimistic view would be that we need to come down to the 200-day. At the same time, the 200-day is rising, so this could be somewhere in the mid $8,000 range. We could push kind of sideways as we correct here and wait for it to come down towards a range that's favorable between a decline in price and a rise in 200-day. That might be the case. We could also look for price to come down again to where we've seen tested before, which was previous resistance here around the upper $8,000, $9,000 range here. Again, that's what we would be looking for, I think, in a more kind of neutral viewpoint here now that we've broken through the wedge. Those are some key ranges that I'm watching for. Either way, again, to me, guys, if you're looking to trade or own crypto for the larger cycle, I'm going to be averaging it if I have cash positions available to me. That's the key thing here. I don't care if I'm getting it at 9,000 or at 8,000, right? I'm picking up positions, and if it continues to decline at the 200-day, I'll take that opportunity. I'm not trading in the short term, guys. This market has been pushing sideways. It's not fun to trade. I like riding the trend. It's so much easier, and so much less stress. That's just me personally. But again, I want to mention another thing as well. And as I was focusing in earlier in the sense of market dominance, we were talking about how Bitcoin dominance still hasn't, gotten above the 70% mark here. And I think this speaks to something very interesting, guys. A lot of people have been just absolutely blown out on altcoins right now. I think people are just losing absolute faith. Everyone's just, stacking sats, as they say, and just focusing on Bitcoin. And no doubt I've got my position in Bitcoin, but I've also got some positions in altcoins as well. And there's a good reason for this. And I want to go ahead and explain that. So first off, you have a lot of indicators here. You obviously have market dominance, quite overextended for Bitcoin here. I think in the long term, Bitcoin will maintain a good stake of dominance. But take a look at Litecoin here. We're taking a look at the Litecoin BTC chart. And I want to clarify as well, some people had complained the other day that I was looking at USD charts. And guys, to be fair, USD charts do hold probably some of the most significance. That's an opinion of mine that has changed over the last few years. I know I taught you all the idea that I believe Bitcoin charts are most important, but that's during an altcoin cycle, right? When you want to beat out Bitcoin in this case, right? That's really kind of the major thing I think to keep in mind, is that you want to see which ones are really keeping up comparative to Bitcoin. And it's not that it's not relevant and outside of an altcoin cycle, but USD charts are very relevant as well. It's what most people are looking at. But Bitcoin charts are very important if you find commonalities historically. And Litecoin's a good example of this. Anytime we go from around the 600,000 sat to 800,000 sat range, this is usually an entry point where Litecoin is a better buy than Bitcoin. It's proven that 3 times in the past year, right? This has been a period of time or price range where we can start to look for some risk taking. And it tends to be then when we get up above, say, 1,700,000 Satoshis upwards toward 2,300,000 to 400,000 Satoshis. That's usually when it's time to start taking a partial share, start taking profits or raising your stops, right? And that's what history tells us. We see that as far back as here. These were ranges where buyers come in, sellers come in. So we're now at a range where the risk taking looks pretty optimal for Litecoin, one of the largest altcoins. But there's something even more interesting. And as I've shown you guys, when I do TA, I look for support and resistance mostly, and I look for repeated price movement. I'm not going to use any indicators here, but what we're taking a look at here is total 2, or basically the overall market cap of the altcoin space. And we can see that altcoins go through pretty severe dips, but they go through pretty significant rallies. And I don't want to say that we're going to do anything near what we did last time in this case, because in the sense of price gains, I think that was a phenomenal once-in-a-lifetime kind of event, and that we will have some great altcoin cycles, but nothing like that, right? And it's going to be very select in a select few plays. But there's something I want to focus on here, and it has to do with this price action right here between July of 2016 and December of 2016, as well as over here from June of 2019 to where we are today. Okay, so let's go ahead and look at this price action here. So if we take a look here, this is the logarithmic chart, and it doesn't look very significant, but I'll turn off the logarithmic chart just to kind of show a little bit more of the significance of this kind of price movement. So we saw altcoin valuations, and God, crazy to think about it. This was when altcoin markets were peaking out here in July of 2016 at $672 million. Crazy, right? It's like, that's a, so there's some altcoins now that hold that entire valuation, which is pretty wild to think. But if we take a look here from the peak here at around $680 million. We see that we come down, roughly speaking, to around $360 million, right? And you can even take it down a little bit more. I think you get a figure somewhere around 340 million. Well, what does it tell you guys? 340 million, 680 million peak, 50% correction, right? Very common in markets. And if you bought anywhere in that range and held, you were rewarded in that case, right? You were hopefully buying for the longer cycle. Well, we've had a pretty stark correction in altcoins. We had our pullback. Majority of the gains were taken back. And they've kept up with Bitcoin here, started to come towards that uptrend. Now, obviously not kept up in most cases, but they've obviously followed the trend of Bitcoin going up and have improved a lot from the decline. And now we're going back through a pretty stark correction. But what many people aren't noticing is that, again, you can take it from the peak here, bottom here, whatever. Roughly speaking, we're going through about a 50% correction. Some people would take it from the level here. Doesn't really matter. You can be really nitpicky about it. And look what we're building into. This is a descending wedge. And a descending wedge probably doesn't look bullish to most average people. And it doesn't sound very bullish, but it is a bullish pattern. It is, because in this case, it is a squeezing of price. And you have the lows, even though they're lowering, in this case they're going to a lower level, they are lowering at a slower rate than the highs here, right? The highs are coming in faster and faster to the downside, stronger and stronger. And I would say, quite frankly, guys, we're at a point where people are going to start, again, taking some risk here. Again, now if we break through this wedge here and pandemonium starts kicking in, yeah, there might be this final alt flush that has to come through. And maybe we're seeing that right now. But the thing is, I haven't been panicking. I haven't sold my altcoin positions. I'm not trying to shill it to you guys by any means. That term's so overused, guys. I'm so tired of a lot of the subculture of crypto. I'm just letting you all know this is what I see in the charts, and you can really take it as is in that case. Just want to give you all the resources you can to take a look at this market. Quite frankly, altcoins have been through a pretty stark correction, and I can see how some people are losing faith in it in this case. But note as well, previous resistance made support, possibly might make support again. I would want to see this hold. I don't want to see this sell much more from where it is now, because we're at the 50% range in a correction like we saw historically, and it's in a descending wedge. If this can't be the moment where altcoins shine, it really might mean that we're not getting an altcoin cycle. So you could take this as a really good thing, or if it goes down a little bit more, a really bad thing. So I can see it both ways, guys. I'm completely fine with taking losses on certain positions and accepting that there might not be an altcoin cycle. But this is what I'm looking for, technically speaking. That's all I'm looking for. Very simple stuff. Not overcomplicating it. Not taking a look at a dozen different indicators. Looking at common technical patterns. Taking a look at history and support and resistance. That's really all you need sometimes. All right, so let's go ahead and run through this news, guys. The backed warehouse opens this September and September 6th. So this is really exciting to see. Obviously, we've been talking about backed for a while. I am more than anything keeping kind of on my toes, waiting to see if this is really going to get a lot of traction. We have been very hyped up about backed. We like the fact that it is obviously founded by individuals such as individuals from ICE, as well as the New York Stock Exchange, who have obviously been working in the exchange business for a long time. It will be open to a lot of participants, from retail to institutional clients. So that's really exciting. There's a big entry vehicle for a lot of people now. It's whether or not it's going to be simple and easy for people to get a hold of cryptocurrencies. So that's what I'm really excited in. I want to see how this launches on the 6th and if the market has any kind of reaction to it. But this is the official tweet that they put out. On September 6th, our warehouse will begin offering secure storage of customer Bitcoin to prepare for the launch of backed Bitcoin daily and monthly futures when they launch on September 23rd. These contracts will enable physical delivery of Bitcoin with end-to-end regulated markets in custody. So again, we've got it coming up here in September, guys, between the 6th and the 23rd. I'm really excited to see this happen. It's been a long time coming. This is kind of the range that we kind of came to, predicting it would be released sometime in the fall with all the regulatory hurdles back in the early part of 2019. We were kind of like, no, we got to wait a little while for this. So it's good to see that this is finally coming in the fall, and it might be an interesting carry point for crypto markets to continue forward after we've finalized our correction, right? So maybe as we've pulled through the wedge here, maybe through September, we're going to come down to the 200-day. We're going to come down to some lower support range. And then when this kicks in, we might get some serious liquidity coming in. All right, so let's talk about the two big bubbles that are being built up right now outside of equities, outside of the property market. And that is basically, and I always mix up fixed income markets. That's not really the term I'm looking for. What I am looking for is passive income or passive investing in this case. So the individual from The Big Short, Michael Burry, in this case, you guys might remember him, or you might remember his character in the movie. He's now talking about how he sees a bubble in passive investing. And he's not the first one to say this. This has been something for a very long time. To explain it in very simple terms, guys, we're going to be spending a lot of time talking about this in the bond bubble. I want to make it very clear for you guys. Passive investing is such a kind of finance term. It's basically, to put it in very simple terms, it's basically people who are just buying ETFs or other types of diversified basketed financial products that hold a lot of different assets. And when you have trillions of dollars over the last few years that have gone into a specific asset class like ETFs or things that again are just broad baskets of investments where people aren't doing their due diligence, they're just kind of tossing money at it and the market keeps going up, they don't really question it. Right? It looks good on paper. You're making returns and the market keeps going up. That's the old saying. Well, the problem with this is that people are making ETFs that people are eventually investing in, and they're basking a ton of companies that people may not really support, or those companies may not have the financials to really deem a good long-term investment. And that's the problem here, is that people are just tossing money at a system. And again, as people use, this isn't exactly quote unquote a Ponzi scheme, but what people imagine as a Ponzi scheme where things just keep going up and eventually they could inevitably crash or have a very stark correction, that's what people fear in this case. What really it's building is a bubble. It's a bubble in this case because people aren't thinking about what they're investing in. This is why fundamentals have really not mattered in the sense of the market, right? It's why most of the market here, if you look at the S&P 500, the NASDAQ, the Dow Jones, nice steady uptrend for the most part over the last few decades, last decade really, in one of the longest economic expansions in U.S. history. So that's the thing to take into mind here. That's what he's talking about. So I recommend you guys check this article out if you'd like. It's a very interesting one to read into, but I want to talk about another bubble that's probably just as big. And it has to do with what would be fixed income markets, which is bonds, treasuries, things of that sort that provide a certain yield or interest rate. Well, nowadays, you're not only getting negative yielding interest rates on a lot of government treasuries across the world, leading to trillions of dollars across the world in bonds being negative yielding, crazy enough as it is. But we've got an even more interesting phenomenon. That is, again, the yield in this case between different bonds. And this is something I put out the other day, and as I suspected, we didn't get much traction on this tweet because it's not related to crypto, and it's probably not very flashy looking as it's on a crappy government website. But this is a photo that I put out showcasing the yield that you will get between the 30-year treasury and a 1-month treasury. And the yield you'll make in a 1-month treasury is more than what you'll get in a 30-year treasury. Okay? I want to let that settle in for a second, okay? Now let me explain why this is big. It means that if I'm taking a treasury that will mature, that will finalize in a month, I'm getting a higher yield than one that is going to mature in 30 years. I will, in 1 month, receive more for my treasury than I will receive on a month-to-month basis for a 30-year treasury that will not mature for 30 years. Think about that for a second. This is the kind of broken yield curve inversion that people talk about. A sign that there's something very wrong going on and that there's distrust in some form of the economy, right? And again, you can just see here, I mean, it's been getting worse and worse. If you take a look at the actual numbers, this was back on the 26th, so it's 3 days now. Go take a look at the government's website. This is from, the actual Treasury Department in the United States. I don't know where it is now. To be fair, maybe it's flipped back or something. But when you have such a divergence from the 1 month to the 30-year, this is the max you can really go to. I mean, that is absolutely, it's groundbreaking. It doesn't make much sense, but it shows you that something is very fundamentally broken right now. And this speaks to a broader problem. Now, if you probably looked at this chart, if you thought it was a daily chart, you'd be like, oh, cool, Nick, what altcoin is this? But this is actually the monthly chart. of TLT, which is an ETF to track basically a 20-year US Treasury in this case. So it's a very easy way where you can get exposure to treasuries through maybe Robinhood or some kind of brokerage platform. But I want to emphasize what's going on in the bond market here and why this is feeding into something that's very concerning. So US markets are still yielding, positive return here. But we're a very, uncommon rarity nowadays that's, standing out comparative to a lot of major global governments now, which are seeing negative yields on their treasuries. And I think with the pace that Treasury is picking up here, it's speaking that we're on course to join them in that game of negative yields eventually. Not yet. We've got some time, but eventually. Now, what's really going on here? So there's an important thing to take into note, guys. Bonds are basically promissory notes. They're a way where you can earn interest over time. Governments get capital, in this case cash, your money, and they're able to use it to fund liabilities, government expenditures, all kinds of things, healthcare, military, whatever it may be. And it tends to be that when bonds yield go down, the bond yields go down, prices go up, and vice versa. When prices go up, bond yields go down. Well, we're seeing a very interesting phenomenon here, something that we really haven't seen at this scale ever in history, and that is negative yielding bonds. So we'll take a look, for example, at German bonds here. So the 30-year bond right now, if we take a look at the value, you would think that, oh my gosh, Germany must be doing great or something, right? If you didn't know much about bonds, you'd just be like, oh my God, this is great. Look at Germany's bonds, like they're going up like crazy, right? Well, this actually means that they're higher risk. And not to mention as well, if you take a look at the yields, you'll know exactly where price is going up. They're negative yielding. So you went from, for example, back here in October of 2018, making 1.1%, owning a German 30-year. Now the yield is negative 25% if you're to take out a new German treasury today, right? That's the yield. So it doesn't make much sense. Like, why would you hold that? If you're holding something that's negative yielding, then that's just, you're literally paying to give someone capital, in this case, to hold a note that says, I gave the government this money. It doesn't make sense. Again, there's no rationale behind this. But what is supporting this is the Ponzi-like mechanism that, again, I guess bubble would be probably a better analogy. If we take a look at this German bond, the German 30-year, if you bought it, say, here or here, you're up on the money pretty good. And that negative yielding rate hasn't really harmed you. So what it does is it's this self-fulfilling prophecy where people, like a Ponzi scheme or a bubble, whatever you want to use, they're buying it and speculating on it. Money managers are only buying these things for the short term. So it's eventually going to get to a point where this goes so parabolic, so crazy, and the yield rate is so negative that people can't ignore it anymore. People start taking profits, and this drops like a rock. And it is going to be one of the biggest upsets of the financial system that we've seen in a very long time. It's going to lead to a lot of distrust in the bond market. If this alone isn't already getting a lot of people caught off guard, think how much it's going to scare the global economy when the bond market, the negative yielding bond market, which is picking up trillions of dollars in value every month now, when it gets to, say, 30, 40, 50 trillion, and then pop overnight. Oh, that was a nice snap. Just like that, it drops down to a few trillion, maybe zero, because people then deem negative yielding bonds by their real value. Nothing, zero, nada, shouldn't be worth anything. In fact, it's a burden because it's a negative yielding rate. No one's going to want them. No one's going to pay for them. This is, I think, going to be, yet again, another kind of QE kind of drive for quantitative easing, because it's going to demand that the central banks of the world come back and buy those very same treasuries and take them off the hands of investors, just like they did with the mortgage-backed securities and just like what they did with other toxic assets across the board in the financial sector back in 2008. It's history repeating itself. We found ourselves in a very interesting predicament. The end of a 30, 40 year, or no, sorry, actually, yeah, it's about 40 year bull market in bonds. We're finally at the peak of it. And now we're seeing something very interesting play out that we haven't seen before. Anyways, I've rambled on enough, guys, but I'd like to know what you think about all this. What's got you? Does this interest you at all? Do you think that this is going to turn out a disaster? Do you think that they might be able to resolve it? We should keep open the idea that there might be something very interesting and positive that turns out of this. Maybe, for example, we find a way to work out the negative yields. Maybe we go through a reset of some sort. It's just weird. Like, everyone's going to a race to the bottom of zero to negative rates. It's very, very fascinating. It's probably one of the most interesting monetary policy experience we've seen in all of history. And it's why I don't give a damn about the correction here in altcoins. I don't give a damn about the sell-off in cryptocurrencies overall. I know that I've got my money parked in an emerging asset class that is going to serve as a hedge across the global stage. And it might drop a little bit tomorrow, it might drop for the next week or next month. I don't care. I'm averaging in, I'm building my position. I'm also looking at gold and silver, and I'm going to prepare myself in the opportunities that I know and I have confidence that I feel will do well in a global environment that is fearful. I think it's finally time, guys. I've been bullish for a long time on a lot of risky assets. Feeling the shift come. It's not on a daily basis. That's the thing I want to make it clear to you guys. I know I talk about a lot of things. We've been talking about this for the last few months, but the shift happens slowly and it picks up pace very quickly as time progresses. I just want to make sure you guys feel you are prepared for whatever might come. Anyways, that's it for the video, everyone. Thank you all so much for watching, and let's go ahead and dive into this interview with Dan. It's a really interesting discussion we had, and it's one of many that we'll probably have over the next few months. But let's go ahead and dive into the conversation with Dan from Morpheus Network. What's going on, everyone? And today I'm very honored to be here with an individual who I've been keeping up with for some time, especially his project in the supply chain logistics space with blockchain technology, and that is Dan Weinberger. Dan, thank you so much for making the time. It's awesome to catch up after a good, pretty much a year since I think we last talked about Morpheus Network on the channel. How have you been doing?
Doing really well. It's crazy to say it's been a year. It's gone by really quickly, but we've accomplished a lot. So it has been packed into only a year's of time. So yes, excited to be back on the channel, most definitely.
Well, Dan, I appreciate it. The honor's all mine. And speaking on that point, I want to start off by getting a little bit of an understanding, because we've got a lot to uncover here in this review of how you guys have been doing over the last year. What is Morpheus Network, and what's kind of some of your background experience that's led you down this path of trying to build a solution for supply chain logistics?
All right, awesome. Yeah, we're a supply chain middleware. We're connecting all these disjointed parts of supply chain. Supply chain is massive, obviously, goes all around the world, and there's so many different companies and different handling points all the way down every single supply chain, whether it's a freight forwarder, a customs broker, the actual exporters, the importers, and everyone down the line. These different government bodies involved as well. So what we like to do is actually put it all together and make it so it's a seamless, automated workflow, as opposed to dealing with all these different companies, all these static data silos at this moment, and making it a lot simpler for these companies to sort of work through their workflows and processes. So, yeah. And you asked my background. The reason I got into this in the first place is actually I do have an import-export background. I've been an import-exporter for over 16 years. I've lived through all these pain points. So I know firsthand, how difficult it is to move things around the world all the time with the compliance documentation and the lack of visibility with all your shipments around the world. So my sort of background led me towards this platform, and that's why I'm excited to sort of work on these different projects and pilots and different things we're doing, and sort of like my history allows me to see these pain points and understand it with our clients. So.
Yeah, no, to build on that, Dan, I think you would agree with me that supply chain logistics is one of the many sectors in the world, probably the largest, where there are so many inefficiencies that could be rooted out in this case. And it's due to a lot of complex middlemen in the process, not having a transparent all-in-one system. I think this kind of middleware solution you're building in order to track and trace products and settle transactions, in this case, between multiple parties when there's dealing with imports and exports.
You're exactly right. The World Bank just last year came out saying that the #1 problem in the world holding back the global GDP from growing is supply chain inefficiency specifically. Mm-hmm. And they're pointing out that the world of global trade is $15 trillion, and there's $1.5 trillion of unrealized funds within that world because of supply chain inefficiency directly. So those are these inefficiencies that we're tackling directly. when it comes to compliances, when it comes to visibility, counterfeit goods entering supply chains, gray market goods being sold the wrong places as well, and not being recorded in the right channels. So yeah, there's so much inefficiency and so much growth, and that's why it's exciting to work on these different projects, which tap into so many different aspects of supply chain as well. So
yeah, so to build on that, Dan, let's go ahead and dive a little into Morpheus. So how are you guys fixing, like maybe kind of the top 2 or 3 points? How are you guys really fixing these issues at hand in the supply chain system? There's obviously some big fish to fry, I think, in what you guys are trying to achieve, but I think at the same time, you're going to add a lot of economic value in what you're doing.
Yeah, most definitely. We within supply chain, what we're good at, which is actually visibility and compliance, right? So those are 2 major pain points with a lot of companies. They don't know where their goods are, and then they can't get them through those borders, or if it's ocean shipping across the water properly. So we built it right into the platform for them, and basically talking to these clients who have these pain points within their businesses, we build out these protocols. So for example, last year we started talking to an amazing partner of ours. We built out this Park, a secure access system. Allows us to take in documentation, store it on the blockchain, being able to hash all these handling points of when people are crossing in and out of this trucking park, being able to attach even IoT devices to the trucking fleets to optimize, and avoid congestion at the entrances of these parks as well. So lots of functionality within the trucking park system, and it's led us to different projects that overlap with similar capability as well.
So you have this entire system where you get to track a product from manufacturer all the way to the point of delivery, providing complete transparency. And I think as well, one of the things that really sold me as well was the kind of automation through smart contracts. I think that was something that really excited me when I first heard about the project, just being able to automate these systems through and through. And again, removing a lot of the bureaucracy and all the signatures and checks and balances that usually are man-made in that case, that provides so much added cost in the process.
Yeah, most definitely. And be able to hash everything on the blockchain as well, and having that proof of an electronic POD hashed on the blockchain, that is absolute, that's when something was delivered based on that POD itself and the timing of it. So incorporating that into a system, I think that blockchain itself, it can be used in many industries, but supply chain specifically, when there's so much movement, the provenance of goods is so important, so many huge bodies involved. And so much disjointedness as well, so we can share all this data and have it working together as opposed to against each other. So.
Well, I completely agree with you on that, Dan. The issue that I see is that there's a very select few use cases for blockchain, and outside of money and financial services, supply chain is up there in my top 3 or 4 use cases for cryptocurrencies and blockchain. Now, I want to build on this kind of topic of Morpheus, because you guys are, I think, amongst many other competitors in this kind of supply chain space for cryptocurrencies or blockchain. But I have to say, you guys have pretty much come out on top out of any project I've seen with your recent news with the DHS, the Department of Homeland Security. Now, I want to let you kind of explain it first, but I understand this is really big because you guys are almost, with this partnership, serving as an integral part into the supply chain management system in the United States, which again is one of the largest, it's obviously the largest economy in the world, not to mention a massive import-export play. So I definitely want to let you kind of take away what this partnership looks like and why it's a really big deal.
Yeah, very excited about it, as you said, and I mentioned that secure access is that we develop at the Argentinian Trucking Park, and we have this partner, Customs Direct. It's a customs broker out of the U.S., and together with our partners, Customs Direct, we've wanted to run a whole bunch of these different pilots and projects, and finally we have this POC, as you mentioned, with the Department of Homeland Security, and specifically around intellectual property rights, right? So as I mentioned, specifically with the trucking park, uploading documents, knowing the history of where these products are coming into the trucking park from, this is exactly what DHS is looking for when it comes to importing goods into the country. They want to make sure, when it comes to property rights, that you're able to manufacture the goods that you're shipping into the country, that whoever's purchasing them has the proper channels and licenses in place in order to sell these products as well. So our system, which we've built for the trucking park, works really well for this as well. So we're super excited about that. And as you mentioned, the scope of the project, and obviously the United States being the world's largest economy, the view of it is to, the stretch goal obviously is to have all importers who want to bring product into the U.S. Have to go onto the CBP website, the Customs Border Protection website, register the product they're bringing in, and as well upload all the proper documentation when it comes to POs and licenses, and that's going to be all Morpheus Network's technology on the back end of all that as well.
So to build on that, just to kind of put it in summary, as an example, if Morpheus, for example, was serving as the middleware layer in this case for imports into the United States, if I was, for example, manufacturing something in Mexico, maybe a certain type of food product, I have certain regulations that need to be met. I need to make sure that I'm actually able to import goods from a certain location that has been certified, things of that sort. So you can have the hash location, you can have the hash details of where it's gone through, whose hands it's touched in this case, meaning different companies and participants. And then finally, once it crosses the border, we can have that transparency there.
You know, Nick, you hit the nail right on the head with that one. Actually, and you're very smart to kind of tap into that, because they're looking at IPR, they're looking at intellectual property rights. So they want to make sure that you're able to sell that product. But the fact, the provenance of that product can go even further back than just intellectual property rights. You mentioned food product, right? Attaching, let's say, certificates, what vet saw this animal on which day to make sure it was given the right hormones or not given the hormones, and so on and so forth. This is a huge industry, and you can attach all this extra information along with the property rights the DHS is implementing. So our view obviously is to, have this system working perfectly, implement. That's a huge project in its own, but then we can grow it out, further from there and add more data and more information to all these different chains.
Well, Dan, that's really exciting. I'm going to go ahead, if you guys want, I'm going to leave a link down below so you guys can check out Morpheus Network. Many of you have obviously already heard about it. We've talked about it a long time. I think it was back in April of 2018 when I first found out about Morpheus and was supporting the project. But again, Dan, really proud of all the things that you guys are doing, proud of the partnerships that you got. And I can't wait to see not only in the aspect of finance and a lot of other sectors inefficiencies removed, but finally in the supply chain logistics system. As someone who's a big business mind myself, I love to see these inefficiencies removed, protection of IP, and again, better systems being built in that make the system more efficient. So Dan, thanks very much for coming on the channel. Really appreciate it, and hope to have you back on soon.
Of course, Nick. Thanks so much for having me, and had a great time as always. So.